Hello and welcome back to Coin Lady channel. Despite their dire situation, XRP has flourished in these unprecedented times. From a legal standpoint, the SEC versus Ripple lawsuit is moving along and should be resolved soon. I should probably give a little tap on the table to make sure. Despite the fact that the federal government is responsible for creating some of the legacy finance and positions that have led to banks figuratively blowing up, XRP has managed to stay afloat despite the odds. According to market capitalization, it is 6th in the world. In this video, I'll explain why I feel even more secure with my holdings in XRP and the cryptocurrency market as a whole. Just take a look at today's events. The news that interest rates are going up by 25 basis points has likely already reached many of you. Indeed, the Federal Reserve followed through with yet another rate hike. Furthermore, it stands in direct opposition to this view. What they are doing with the banks runs counter to their stated goal of reducing inflation, though. Because if banks keep failing, and I mentioned this in a video yesterday, so I won't go over the same ground twice, but there are many different kinds of regional banks. As everyone can see, the stock market is in freefall. The stock market is frozen in terror. What will the impact of any future bailouts be on the government budget? Because if that goes up, we all know what happens to our efforts to keep inflation low. So, it's like how some actions here contribute to higher inflation while others, are ones that should gradually fade away. Inflation. Both are being carried out by the government. To what level of stupidity must you aspire? But the fact remains that they're incorrect. They were stuck between a rock and a hard place, since no nation could survive without its citizens having faith in its banking system. What would happen if the Fed decided not to bail out the banks while they are in such dire straits? However, this is the result of a banking system called fractional reserve banking. This is an example of banking with a fractional reserve. That's the way it is. This is why I hold the government responsible before anyone or anything else. This is yet another reason I'm overjoyed to have access to cryptos. This is a first in human history, but I own around 30 different cryptocurrencies. Consequently, as I'll discuss further in the video, many people are now speculating that, if things really end up getting lit on fire here financially, and if things really start spiraling out of control, who knows what happens with the dollar? This could serve as a spark. One of the reasons I maintain this belief is the hypothesis that says crypto assets like Bitcoin and XRP should simply continue rising for the time being out of sheer panic that the system might collapse. But I'll be honest and say that there isn't enough of a track record to know for sure what would occur. Even if crypto falls because it's seen as a risky asset, or if there's some sort of wildcard incident that causes everything to go down in flames, I think markets always find a bottom. Crypto hasn't really been tested in an environment like this before. Cryptocurrencies will continue to exist even if the dollar and other parts of the economy don't rebound to their previous levels. Even though I have faith that this is the case, I admit that in the short term it is possible that things could deteriorate rapidly due to an unexpected event. If this were to occur, it would likely be due to a crisis involving the U.S. dollar. No, I don't think this is something I can foresee. This is simply me thinking aloud. I've given this a lot of thought. Probably most of you can relate to that. I mean, hypothetically speaking, what happens? The dollar is the world's reserve currency, thus that is exactly what would happen. The dollar can only be used that way once, right? In that case, once the markets have stabilized, I will be content. I'm grateful to have something that can't be devalued by a centralized authority. Deflationary is the correct term for XRP. There are a number of factors that contribute to my perspective. I just want to clarify something before I go any farther with my thoughts on this. I come from a completely monetary free background. Do not buy or sell anything based on anything I say or write. I'm not giving financial advice. Just a hobbyist here that occasionally posts films to YouTube on various crypto-related topics. You can leave if you don't like it, damn it. At the time of writing, 1 XRP is worth 46 cents. The market capitalization of Bitcoin is barely around $29,000. Bitcoin's share of the $1.20 trillion market is 46.43%. Your fear and greed index for cryptocurrencies is at 64. Investors are motivated by greed. Now here's a view from Cointelegraph writer and chart analyst Rakesh Biddy. He wrote this before we heard the news of the rate hike, the increase of 0.25%. And I'd like to share a snippet of what he wrote with you regarding XRP. In fact, he admits that XRP could return to the 30-something cent range if we do see a bit of a move to the downside, at least in the short term for crypto, especially if we get as low as $0.43. That's some sort of particular level he's watching for where it could cause a cascading effect on down to the 30-something cent region. That squares with what I've heard from the blockchain project's backer and others. Because, as I'm sure you know, technical analysis is concerned with probabilities rather than actual, generally speaking, not price predictions. This is by no means a guarantee that this will occur. This is not impossible by any means. Still, even if that's the case, I'd say crypto has had a very good year overall, despite the chaos. And again, I remain convinced that the bottom for crypto markets was seen in November of last year, barring some unforeseen event. However, the following is also included in what Rakesh Upadhyay has written here. BitMEX warned investors that investing in assets outside of the conventional financial system is the only way out if they want to keep their capital well in an exclusive interview with Cointelegraph with Arthur Hayes, the co-founder and former CEO of Crypto Derivatives Exchange. Just wanted to say that because, you know, there are plenty of people out there who think the same way. And I'm not claiming it's totally incorrect, either. To reiterate what I said a few minutes ago, there is no basis in history to assume that to be the most likely outcome. This is, of course, just conjectural. It is what it is, period. And it does seem to make some degree of sense logically. And that's why I wanted to make sure we were all on the same page. From my point of view, it all hinges on the nature of the catastrophe that's dragging the world to its knees. It probably wouldn't be the dollar if you were talking about something associated with it. Perhaps there is some mysterious force keeping the dollar around. However, the banking system is still in a state of collapse. The fact that the United States controls the United States dollar, and that it serves as the world's reserve currency means that events taking place in the United States have global repercussions. That settles the matter. Therefore, I'm not forecasting that calamity, that the dollar will be over and over again. This is just me thinking aloud in response to recent discussions. In the end, I believe crypto will find support and recover. The dollar needs to go now. Could it still be considered the world's reserve currency? In that situation, what would truly occur? Therefore, this idea, once more, that if you want to set aside money for something, it should be something located outside the United States. All right then. However, if you say that, you're predicting the end of the world from a U.S. economic standpoint. Just as I did. It seems unlikely that something like that will occur in the near future. I get that the powers that be are complete moron, but I still can't bring myself to follow their lead. I'm merely pointing out that my doubts remain. Many well-known figures in the cryptocurrency and banking industries share this view. While I do admit that I do hold that as a hedge, just in case, I don't feel quite as strongly about it. Having that on hand is reassuring to me. This is why I have invested in deflationary XRP and other cryptocurrencies. Here's what CNBC's lead story looked like. The Fed's rate boost of 0.25 percentage point could be the last for the foreseeable future. The Federal Reserve raised interest rates for the 10th time in a little over a year on Wednesday and gave a hesitant indication that the current tightening cycle may be nearing its end. The Federal Open Market Committee of the Federal Reserve raised its benchmark borrowing rate by 0.25 percentage points in a unanimous move widely anticipated by markets. The rate determines the cost of overnight borrowing between banks and influences a wide range of consumer loans and credit card rates. As a result of the hike, the target range for the Fed funds rate is now between 5% and 5.25%, the highest it has been since August of 2007. With persistent worries over economic growth and a banking crisis that has rocked nerves on Wall Street, investors are more concerned with whether or not the Fed would pause here. Almost immediately after the Fed announcement, stocks jumped marginally, while rates on treasuries fell across the board. However, stock prices had a hard time keeping their gains. To take this a step further, I'm going to relay some advice from John Deaton, an attorney. When I do pass along information from him, it's almost often related to the law. Some of it is silly, but I thought he made some really important points and presented some intriguing material, especially about the condition of things from a financial viewpoint. But he's absolutely right about this. Consequently, he forwarded a tweet from MSNBC's Chris Hayes. "I'm catastrophizing a bit," Chris Hayes wrote. "A soft landing is still feasible in my opinion, but the Fed seems determined to not accept that response. When I come across stuff like that, I'm always confused. Please, explain the concept of a soft landing to me. Because several banks have already failed. There was just the second largest bank failure in U.S. history. And you haven't stopped babbling. Okay, sure. The landing is gentle. That. What? Son, please explain your definition of soft landing. Because I can't seem to grasp that concept. I don't see this smooth landing that people keep talking about," tweeted attorney John Deaton. "As a result of the Fed's rate hike, many smaller banks will go under. Even if Biden has no idea what's going on, we're confident in the state of our banking system. If that is the case, then why isn't Buffett purchasing financial institutions? For the reason that it is a jumbled mess. Yeah. You can believe anything you want to believe when you hear the government say our financial system is healthy and robust, but I'm just going by the facts and I'm not convinced. I simply cannot." In addition, he tweeted the link to this blog to his 910,000 followers. And there was a video from 2011 with Alan Greenspan, who had served as chairman of the Federal Reserve Board. In addition, a citation from the video is included. According to Greenspan, the United States can always print more money to cover its debts. There is consequently no possible face palm in the event of a default. Of course, you're touching on the looming debt limit, which is a problem that will never go away as long as the government keeps spending lavishly and failing to rein in its spending. Let's just get a new credit card and run it up to zero, right? Do you think you can actually pull that off in real life? Since the government can simply print more money, Greenspan argued in 2011 that this wasn't a problem. That seems impossible to screw up. The interest payments on that sum of money can't possibly backfire. You can't just run up as many debts as you like that. There won't be any repercussions, right? This is why such things occur. True, that was back in 2011, However, I consider such matters because they reflect the worldview of the year 2023. Now I'm glad I invested in cryptocurrency, I think. I'm really happy that I invested in cryptocurrency, and especially XRP. So, lawyer Deaton retweeted it with the comment, "This is interesting, just paint a picture of how horrific things have become," and the conversation continued from there. I didn't verify it, but it seems about right, and I have faith that John Deaton's calculations are correct. From his perspective, the total cost of COVID over time amounts to $5.20 trillion in printed currency. Now, though, have a look at this, $5.2 trillion during the pandemic. In today's dollars, the cost of World War II is $4.70 trillion. Hence, this represents an inflation adjustment. Less was spent on World War II overall than on anything associated with the pandemic. Wow, that is totally insane. In that context, it's absolutely mind-boggling. A total of $13 trillion has been printed since COVID, he continues, $5 trillion for COVID, $4 billion for QE, and $3 billion for infrastructure. After adjusting for inflation, the United States printed a total of $1 trillion in its first 200 years. That's $1 trillion for the first 200 years and $13 trillion during the epidemic era. When you hear someone like Greenspan from back then say something, and then you hear it repeated now, you know that they were right. Okay, sure. Simply printing more money is always an option. But when and where will it finish, if at all? Because there really is no upper limit to the debt. A false ceiling in the bathroom. Are we being honest with ourselves? Obviously, this is not a ceiling. If it goes high each time you hit it, regardless of how the economy is doing at the time. If it always goes up, then it's not like it makes any difference. It's all an act, people. Just plain dumb. Here we are again on the verge of hitting the debt ceiling. Again, this cannot and will not last forever. If the United States defaults on Standard Chartered, Bitcoin might soar by as much as 70%, according to a Business Insider story that attorney Deaton also shared. This completes the cycle, I suppose. This is the topic with which I open the video. Alright, XRP, in a word, yes. Effectiveness unparalleled in history. I couldn't be more pleased with the current state of the crypto market in 2023. What will happen if things continue to deteriorate is a related concern. Is that a positive development for crypto? Again, I won't say for certain that I'm not. This is why I'm speaking with complete transparency and intellectual honesty. I just don't know for sure, which is why I'm eager to get some exposure. My intuition is telling me that, well, there's probably not. Although I can think of no prior experience that would lead me to believe this to be the case, I can see how this could be the case. So that's why I'm kind of in the middle, I guess. My feelings about that are conflicted. Plus, just knowing that, because I'll tell you this, if you look at anything, historically, you look at how, the decisions from the federal government and the economic state of things, just from the United States, has impacted crypto on a global scale, because there's a very clear connection there. What happens next? The situation has worsened. Do you see why I'm skeptical, but also why I want to hold it just in case? And this is the first time it's good for crypto, maybe. This is what I'm getting at, but I can't say for sure. I hold Bitcoin, but I would rather see the United States meet its financial commitments than have a default, attorney Deaton wrote. We can all concur with that idea, no doubt. Right. This is it, then? Inside the markets. Bond and stock markets have been unsettled as a result of the continuing impasse over the debt ceiling. While the prospect of a historic default has some investors running for the exits, there is one asset that could benefit from such a scenario: Bitcoin. There is a lull in the action there. Plus much more than just Bitcoin. XRP, which is deflationary and has no governing body, follows the same trends as the rest of the cryptocurrency market. Yen. Let me tell you something. If this is beneficial for Bitcoin, then I would wager that it will be even more so for XRP. This is just my view, but I think a US default would have a huge impact but a small chance of happening. Standard Chartered's head of research, Jeff Kendrick, predicted a price increase of $68,060, 68%, or almost $20,000, for Bitcoin. I can't believe I just said that. It's a 68% gain from where we were. I'll ask again, does that make any sense to you? Is that the result of widespread panic? Despite Bitcoin's reputation as a high-risk investment in the past, investors today see the cryptocurrency as a safe bet. This is the first time in history that so many people are investing in it, driving up the price. I'm glad to have Bitcoin in my possession. I'm all for Bitcoin. Since 2017, I've kept it in XRP and a variety of other cryptocurrencies. Now, look at this. Also in today's Daily Huddle, Chris Marsalek, CEO of Crypto.com, says the US banking crisis will hurt. The co-CEO of Crypto.com claims, the significance of Bitcoin and blockchain technology has been highlighted by the current banking crisis. Quote, some people were wondering what the point of crypto was at the end of last year. Just what is going on here? When your financial institutions fail, this becomes abundantly evident. Bitcoin is an important technological advancement. And in the current climate, it's not hard to explain to people. One of the reasons the Bitcoin price is near $30,000 is because of this. The general public is aware of the significance of this technological development. Quote ends. Is that really why we've reached the $30,000 mark? Wasn't Bitcoin's price rising before the banking crisis hit? Yes. Okay, so I guess I do agree with some of this. However, Bitcoin isn't the only topic. You might as well say crypto instead of Bitcoin. Just call it crypto already. Bitcoin is the cryptocurrency with the fewest advanced features. Advantage of being the first to market. I continue to support Bitcoin. I'm just saying that there are very serious technical restrictions, and that a functional second layer is required for any use case than simple value storage. Even though the XRP ledger is compatible with Spin, no Layer 2 implementation for Bitcoin has gained widespread traction. That being said, things do exist. To be honest, I'm starting to have my doubts about Lightning Network's long-term viability. Maybe things will work out, but that's an entirely new kettle of fish. But here's the thought again, it's pretty obvious that all the banking trouble here, hey, you go to crypto, right? But is it really the case? Is this just the story that crypto professionals tell themselves? And at this point, I have my doubts. Having this and spreading out your wealth like a portfolio is still a good idea, in my opinion. However, perhaps there will come a time when this asset class has developed and people will be like, yeah, it does. Then it is handled in that fashion. But is this the time when it finally occurs? If we see anything, something more catastrophic, I wouldn't mind seeing that. I don't even mind if that turns out to be true. But now you understand why I'm telling you this. It's all the smart individuals in the finance industry appear to agree that this is the standard wisdom in the crypto sector. To add insult to injury, I come from a poor family. This is just the regular Joe's perspective I have to offer. But do they have a point? Because, the folks who work in finance and economics are always wrong about the most important issues. So, I tend to take their words with a pinch of salt. Not all of them impress me as exceptionally bright. Is this, then, the time for something so unprecedented that defies comparison to the past? As long as I've worked in crypto, I've heard stories like this, but this is it. Thus, I'm uncertain. If you think so, tell me. Despite everything that's uncertain, all I can say right now is that I'm glad to have extra P in my possession. I'm eager to learn how the SEC's Ripple case pans out. I have a positive outlook. So I'll quit rambling on now. In the space provided below, please share your thoughts with me. No, I don't give out financial advice. Nothing I say or write should be used as a basis for making financial decisions. In the end, please like and subscribe as always. See you in the next one, bye.